Taxpayers who hire domestic help become employers in a real and legal sense. As such, they have the same obligation as other employers to withhold payroll taxes from their employees' paychecks and to pay the employer portion of Social Security and Medicare. This comes as a surprise to many Americans every year and is often overlooked by taxpayers. Who qualifies as a household employee? A household worker, regardless of whether the work is full or part-time, can be a babysitter, a nanny, a maid, a housekeeper, a cook, a gardener, or a healthcare provider. Household employees do not include self-employed individuals, nor do they include workers hired through any kind of placement agency that controls the work and how it is performed. Household employment taxes must be withheld and paid by all taxpayers who have household employees to whom they pay qualifying wages. The amount of qualifying wages depends upon the type of employment tax. There are 4 types of taxes that may be required by household employers: Social Security and Medicare taxes, federal unemployment taxes, federal income tax, and state income and unemployment taxes. Social Security and Medicare taxes, also referred to as FICA tax, are 15.3% of the amount due and owed on wages of $2,100 or more per employee per year. No FICA tax is withheld if calendar year wages are less than $2,100. An employer match is required. Federal unemployment taxes, which are very often called FUTA tax, are owed on wages of $1,000 or more in any quarter. Otherwise, they are paid at the end of the year. FUTA tax applies only to the first $7,000 of wages paid to each household employee in the calendar year. Federal unemployment taxes are paid only by the employer. The employee doesn't contribute at all. Household employers are not required to withhold federal income tax from a household employee's wages. Payment of federal income tax is the employee's responsibility. However, federal income tax may be withheld from wages if the employee so requests on Form W-4 and if the employer agrees. State income and unemployment taxes may also apply, but are beyond the scope of this course. You will need to educate yourself about the requirements for the states in which your clients live. Household employers must have an employer identification number. Social Security number is not an acceptable substitute. The taxpayer must file a Form W-2 for each household employee who had Social Security or federal income tax withheld, as well as Form W-3. He is also required to send copy A of Form W-2 to the Social Security Administration. If federal income tax is being withheld, the employer must also provide Form W-4 to each employee, who must complete it to determine the number of allowances they wish to claim and return it to the employer. There is also an exemption from FICA for workers who are under the age of 18, as long as household employment is not their principal occupation. Full-time student is considered an occupation. How are household employment taxes paid? Household employment tax payments must be included in estimated tax payments. Because most household employers are not self-employed, they are likely to be unfamiliar with quarterly estimated taxes. You may need to educate them on what they are and how they are handled. Household employers must also file Schedule H of Form 1040, usually with their federal tax return, to report their annual totals. This schedule must be filed by a taxpayer who can answer yes to any of the following questions. Did you pay any household employee cash wages of $2,100 or more in the tax year? Did you withhold federal income tax for any household employee during the tax year? Did you pay total cash wages of $1,000 or more in any calendar quarter of the current or previous tax year to all household employees combined? Your workbook is a great resource for additional information about these other taxes. You will occasionally encounter these situations in your tax work. The workbook and the IRS website can provide specific details about the complexities of these taxes and how they apply to your individual clients. There are 2 other taxes that apply to some taxpayers under the Affordable Care Act. The first is called the Additional Medicare Tax. It applies to taxpayers with incomes above a certain limit and is calculated at a rate of 0.9% on amounts in excess of the threshold. The result of that calculation goes on Form 8959. The other tax is the net investment income tax, which generally means gross income from interest, dividends, annuities, royalties, rents, gains and losses on the disposition of property, as well as other gross income derived from a trade or business that's a passive activity. Like the additional Medicare tax, it also applies to taxpayers with incomes above a certain threshold. The excess is multiplied by 3.8%.